Thanks, Air, for having me and inviting me to speak on this topic of physical channels in the digital world. Glad to share some of our experiences having spent nearly 2 decades across various areas in insurance, as well as more than a decade in digital transformations with about 40 odd insurers in across 12 odd countries. We have learned a lot, not only implementing but also evolving our products to adapt to the emerging digital context. Let me start by first setting the understanding of the digital context as we summarize in a brief manner the various different digital and digital business models that we are seeing, which are setting the context of a digital world for the life insurance and as such. And as I see the broad classification of the different models could be in the areas of the splitting of the value chain with the entry of aggregators, the e-commerce model, and whether it is the bundling of the insurance into the some other product category, whether it is point of sale products, new business models like P2P, or digital insurers who are the niche players, or even the new channel models which are specific to the insurance, the agency-led corporations kind of structure which you see, or even the point of sale brokers, or sometimes the new millennial generation creating salaried models because they are not so much comfortable with the commission models. So while we have seen all different aspects of disruptions happening, like it is happening in all across other industries as well, insurance is not isolated from that, and insurance is also facing a lot of disruptions. So how does the physical channel stay relevant in these kind of disruptions? And as I see, it is not a point of whether the new channels will split the pie. It is about how the digital is growing the pie by adding new categories of business, improving the penetration and reach, and so as a result it is only expanding the business. Now what needs to be looked at is how the physical channels adapt to the digital context and ensure that they leverage the physical channel better. To me, the critical aspects of this hinges on the complexity of the product. Depending if it is simplified, products are more amenable to and fall in the pull category and more easier to buy online. While complex products, they need to either split into niche categories and make it simplified, or simplify or bundle it with some embedded products. So depending upon the segmentations, the complexity can be reduced, or if it is a product category, the complexity would remain and would still be positioned. Certain categories would remain to be complex. Keeping this view, the other aspect is the changing consumer behavior. Customers are also looking at simplifying. The buying behavior has changed. They're splitting the entire value chain and they are hopping across channels. Some channels purely for lead generation, some channels focus on the research, some are focusing on reviews, and some are actually generating quotes and illustrations, and finally some are fulfilling. So this splitting of value chain is a very uniquely changing behavior, and that will determine the use of phygital models in insurance. And that's what I know, because it will have to be a marriage of both the physical and digital, and see a good emergence. It cannot be just one channel, it will be a combination. Then is the channel temperament. Not all channels are ready adapted for all types of categories. So we'll have to understand that some channels will be more suited for digital, some channels will be more suited for physical. And again, physical in the new context will be the phygital models. Then some, because of the compliance needs, some will again be more suited for physical versus digital. So keeping these aspects in mind, the relevance, according to me, is a matter of the more of how each channel adapts to the context that will emerge in the digital world. So how does the insurers assess whether they have adapted or we are ready more for digital adoption of the physical channels? And for me, the four key measures in this is the first capability lands on the customization or the packaging or bundling of the products versus for whether it is point of sale, whether it is amenable for. So this capability of bundling and unbundling of an insurer is very critical in the coming age. The second is the interoperability. So how they are able to operate and handshake seamlessly, whether it is picking data or whether it is bundling with the point of sale of a particular travel, or whether it is for the banking, for credit life. So this interoperability or fetching data for helping completing the fulfillment process more seamlessly. And the third aspect is adaptability to new business model, which are not conventional application form submission, but whether it is a P2P, whether it is embedded insurance, need the business model to be adapted and how easily. And all these three parameters, important is that how you can do it in a very agile manner. In terms of the time to achieve and operate is very critical. So the insurance capability on these four dimensions, according to me, are the one will determine whether digital readiness to physical channels. Coming to the next, so how does it, once ready, what are the key best practices that we see, which are for successful reengineering to the phygital models? And I see this can be classified, the best practices, into three main categories. The one category is of the complete digital for an empowerment of sales. The second category is about proactive service for customer delight, and third is about the performance management. This let's look at each of these category of best practices to understand what are the practices that how the insurers are leveraging it to make the physical channels more relevant in the current context. The importance of the key positioning of the physical channels is towards advisory or consultative nature to help the customer not just push but also to nudge towards making a decision. And this needs an empowerment or need analysis to help customer find out what are the products, what are the categories which are more suitable to his life stages, what is the size of the ticket size of the policy that he needs to go, which can sustain. So this advisory needs some amount of hand-holding and some amount of understanding of the products to help most of the customer. Not all customers are educated enough to understand all insurance products equally well. Plus the offering of multiple illustrations to make the customer feel happy about alternative decisions that he is willing to take, and providing him illustrations with different combinations that suit his needs. Then while the entire sales process, there would be points where a customer would want to address his queries, and to position a physical agent advisor more as a consultant, you will need to address these solvers, whether it is for target funds or the likes, or even providing compare options across products within your basket or across other products in the competition by providing. So this needs a lot of helps position the physical channel more as an advisor consultant who is a specialist in insurance. The second is the intelligent end-to-end app. End-to-end, very critical in the aspect that we've seen a lot of failures, not because it has been the solution could be offered, a feature can be offered, because it could not be provided end-to-end to help ease out the entire fulfillment process from a lead to the submission, or from providing not only one or two products but all the product basket that he's been used to selling, and which are at least covering the majority of his current sales. These have been critical in terms of even insurers who have provided incentives have not been helped adoption, but providing a complete end-to-end has been very effective in terms of ensuring the success of the implementation. Third is, yes, the aspect, all this aspect in combined with the new challenges of the social distancing, where a digital face-to-face is currently not available, and how to make the customer comfortable even in a asynchronous communication, that he's more comfortable today with the likes of chatbot. He would like to even do the fulfillment in a asynchronous as per his convenience. So even if the agent fills up the part of the form and uses the past illustrations that they have done in the earlier interactions, how he can take that process forward for allowing the customer to fill up only those incremental declarations or attach the specific documents that he wants in a secured way, or sign in a very secured way from his own device. This easy engagement across the agent as well as the customer is a very critical aspect in this coming age. And in addition, as we move along, the encoding of the forms will keep on reducing with more and more APIs available, whether it is for the customer KYCs, anti-money laundering checks, or whether it is for credit or financial rating checks, or medical records, bureaus, or whether it is for a claims experience. Keeping all these services, the architecture should be ready to handle seamlessly and minimize the amount of data entry that is typically practiced of the past. This leads to the next aspect, leads analytics, which has been conventionally insurers have been more comfortable assigning leads. Now need to look at cross-selling, upselling in more effective manner based upon the analytics of the sales propensity models that they keep on learning and adapting. This can even be extended like the way we have in banking. There's a pre-approved loan. There are insurers who are looking at pre-underwritten policies for a specific target segment, and that can be further extended. Activity analytics can be used to help determine the training needs to ensure that the completion of the sales process is much more effective for the physical channels, and he becomes a better consultant. Finally, even providing collateral support, which can help the salesperson address the sales objection proactively by comparisons, by references or third-party ratings of different funds or so. This brings me to the last point on the support needed for making decisions, whether it is for giving decisions on underwriting, whether it is a guaranteed issuance case, STP case, or even sometimes even rated up cases. Can the decisions be done? And in the best practices that we are seeing, we are able to see some of the customers adopting this better rated field underwriting decisions as well. And even if some of those slip and there are counter offer specialized decisions needed, how can the tools provide complete information holistically for the agent to make the decisions? This we can look at the second dimension that about the how does the best practices seem to be evolving in the area of servicing. In the servicing aspects, yes, we look at the customers definitely expect all the inquiries to be available, and even regulators at times are insisting upon all the inquiries to be available for the customer to look at. But the aspect is about all a transaction ability, that a customer is able to alter the policy, or whether it's financial, non-financial, and even able to see the illustrations for the enforced policy, or even rate up underwriting rating for the enforced policies. But in addition to this transaction and information capability, it is important that today the engagement need to scale up to manage the life cycle in a more positive, by engaging with the customer on the various life health lifestyles for the customer. And this engagement need to can interact, provide discounts on add-on premiums or renewals, providing medical checkups seem to be the model which is enhancing, and the customer appreciate that engagement, that the insurer is not only interested in avoiding the claims, but in engaging in a better life for the customer. This can definitely bring a lot of benefits in terms of cross-sell and upsell opportunities for the customer. And the third critical aspect that I mentioned that we see is on the claims automation for minor claims, or even automation for the major claims, where the decisions can be rule driven, processes can be tracked, and empowering for the decision makers to take a quick decision within the task, and also learn from these decisions to help improvise and automate further decisions. So this have been the more on the servicing side. So looking at the third critical dimension on the intelligent parameters that we can look at in terms of the performance aspect of it, and how does the physical channel feel empowered, whether it is in managing his hierarchy positions, the movement, automation, and whether it is compensations, commissions, the basic commission, override commissions, but also to track his holistic KPIs. The trend towards the KPIs is not only looking at the premium or commissions, but also to look holistically on the quality of business, the persistency, the customer satisfaction, the mis-selling, the training, or recruitment criteria. So the insurers are looking towards holistic parameters, and not just ensure which are aligned to their business goals, but even regulators are keen to ensuring that the compensations are more accountable and linked to which can be manifested in the balance scorecard models that you see in Singapore, Malaysia, or even the assessment ranking based models in Japan or in Korea, with persistency getting linked even for the basic commission. So this model and this trend is continuing, with a lot of transparency being sought by the regulators in declaring the commission payout for the customer upfront at the point of sale. This can be further extended to the need for onboarding, which need not be a process for the insurer at the branches or at the back end, but empowering the field force, the physical channels, to onboard more of the teammates to grow the business. Similarly, for the CXOs of an insurance company, you would be looking at the performance, is whether it is really delivering to the objectives that they have really sought while creating or crafting a particular scheme, whether it is for incentive or for. So to assess, and they would like to simulate and evolve and learn and improve. And these are also becoming a critical best practices for insurer to learn and improve on their compensations. The other best practice that we see is towards differentiated compensations. Not all would like to be treated the same way. Neither your business doesn't come the same from all the people. There will always be some high-end performance, whether it is MTRT agents or platinum agents. And categorization and providing compensations and services needs to be automated and provided seamlessly to this. This capability is another critical aspect needed in becoming an important best practice. All these core capabilities need to be communicated seamlessly with the partners to be more effective. Many times we've seen that this communication happens at the end of a scheme or end of a cycle, which doesn't really help bring out or motivate the channel to deliver better. Providing this information seamlessly on a regular basis and so yields better results. And that's where the tools. We've seen insurers investing in portals, but many of these portals or the communication tools are as good or as bad as their ability to provide data in a seamless manner, in an automated manner. And as a result, many of them languishing significantly because of the physical interventions that are happening in massaging or collating the data. And as a result, the portals are as good or as bad as the data being consolidated. So our endeavor, the best practices is not only just launching a portal, but powering it with tools which have the capability to provide this front end. This brings me to the critical point of while engineering these best practices, what are the likely pitfalls and that inhibit the successful phygital channels. In our experience, I would like to categorize this into 4 key areas. Whether it is the siloed approach, and many of these are because of the shorter term architecture and short-term view of the business, which leads to a very siloed approach where we see implementations just focusing on a particular small niche. This siloed approach lead to very limited and challenges in terms of the total time to market end to end keeps on growing, and with multiple physical handshakes or multiple time to the overall time to launch a particular thing keeps on growing with multiple silos. The second is the user interfaces. There is an overemphasis on the look and feel and less emphasis on the solution design capabilities, and which leads to because the focus is on only one or two product, not to end-to-end capability of the organization, and that's has also seen to be limit the phygital transformation capabilities. Third is that the technology myths that do-it-yourself upgrades like the process management tools, the role engine will solve all the problems and can be extended to the enterprise. While in actual practice, we've seen that while they are good tools, but their implementation needs a lot of orchestration capabilities which cannot be put into these tools. And this again is dependent on the individuals who architects this orchestration across these tools. As a result, they land up becoming coded for that insurer and do not serve the purpose of the flexibility to which they are supposed to get it. So these myths have landed up with a lot of failures and which inhibited the phygital transformation. Another critical dimension is about the wrong use of agile. While agile definitely is a good methodology, it is not something that fits all the kinds of implementation. Something which is fundamental and architectural and which is more core to your operations cannot be built in an agile. Agile has evolved more towards the look and feel model, which was more at the front end, adapting the usability so as the user gets a better understanding, is able to give feedback. But for the core components, it is better in our experience to use the best practices of the products which have matured in the industry and give you a good baseline of start. And from there, you can use a low code, no code approach to build more agile configurations and adapt more to your specific needs. So this has been the inhibitors which have usually held back. This brings me to the end of in summary, what I would say, the true transformation from physical to phygital depends upon not just the adoption of technologies. Technology is an enabler, but a true sustainable architecture and the right implementation of this will ensure success of the relevance of the phygital models. Thank you.